Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Monday, January 31st, 2022, and I'm pre-recording this Trading Places Live for Tuesday, February 1st. Futures currently looking like maybe we'll take a little break. Had a couple of really good days in the market, finished strong on Friday, had an excellent day earlier today, and futures at this point anyway look like maybe we'll get off to a little rockier start tomorrow. Dow futures are down 135 points, S&P 500 futures down 21, NASDAQ futures down 67. I will say, though, things can change tremendously overnight, so it wouldn't surprise me if we saw some different looking futures in the morning. We did finish on the highs today, so I would be expecting that we would see a move higher in the morning tomorrow, and then we'll see where we go from there. But at least for now, it does look like futures are getting off to a little rougher start this evening. All right, let me take you over to earnings beats. Actually, before we do that, let me just walk you through today's agenda. So we'll start off with the daily market recap, take a look at Monday's action. Then we'll get into talking technically. I just want to bring up a couple of charts of the key indices and show you a couple of interesting points there. Then we'll get into chart lists. I want to show you one of the things we do at Earnings Beats for our free community members over at Earnings Beats Digest. We actually have 5 earnings chart lists that you can download. I'll show you how easy you can do that. And then it's so easy to just quickly see what kind of market reactions there are to the various earnings reports out. Then we'll get into the earnings spotlight and wrap up the show with the 3 you must see. But again, before we get into any of that, let me take you over to Earnings Beats. For those of you that are new to Earnings Beats, just go over to earningsbeats.com. Scroll down. We have a free newsletter, our Earnings Beats Digest newsletter. I publish it every Monday, Wednesday, and Friday morning. Normally, it's out by about 8:30 Eastern. So normally maybe an hour or so before the market opens. All you need to do is put in your name, email address, hit that subscribe button. This is completely free. There's no credit card required. You can unsubscribe at any time. We'd love to have you. It's just a way to maybe see how we look at the market. And we'll talk about earnings, gaps, candlesticks, relative strength, many of the things that are really important to us at Earnings Beats. I think you'll find maybe a few things from here or there that maybe you can incorporate into your own trading or investing strategy. But we'd love to have you check that out. Also, we do a lot of free events. And when we do free events, we reach out to our entire community and invite everyone on our list and provide the webinar instructions, including a link to the room. So anytime we do free events, we do a lot of them. If you're on this newsletter, you'll be invited. All right, let's move on to the action from Monday. It was actually a great day. We finished really strong on Friday at the close. The last half hour on Friday, if you remember, was almost a melt up in the market. And that was after we'd had a really rough start to the week last Monday, had a huge drop on the S&P. But we did rally back and we held on to this 4,300 support right here. So here was the intraday move last Monday, but we came back up, tested 4,300 a few times during the week. But then rallied Friday really strong and then had another excellent day today. The numbers, Dow Jones Industrial Average up 406 points, so a little over 1%. S&P 500 up 83. That was almost 2%. And the NASDAQ was up 469 points, which was up almost 3.5%. Huge one-day rally there on the NASDAQ. Mid caps up more than 2%, 2.2%, 57 points. And small caps up over 2%, up 27 points. So across the board, really good action. Looking at the sectors, all 11 sectors were higher on Monday. So there was no weakness out there. Of course, there was some relative weakness, but on an absolute basis, they were all higher. Discretionary, technology, communication services. Those are the 3 aggressive groups that I like to see lead the market. And there they were finally. The 3 of them together. Haven't seen that in quite some time, but that was a really good start to the week. We'll see how much we have left in the tank as we get into tomorrow. As I mentioned, futures currently are down just a bit. Utilities also a strong day, up almost 2%, and materials up 1.5%. So those were your 5 leaders on Monday. Really good action. 10-year Treasury yield. We were down just, actually, we finished even for the day. We were up earlier in the session. In fact, last couple sessions, Friday and yesterday, we did gap up both sessions, but we struggled to close up. And so finishing back down to even break-even point, 1.78%. Still trading, though, above the 20-day, still in this uptrend. Looks to me like a symmetrical triangle or a flag pattern pennant off of an uptrend, no matter what you call it. These types of consolidation periods are bullish continuation patterns. So I would be looking for a breakout here on the 10-year Treasury yield above that high we saw in mid-June. When we get that, it's probably not going to bode well for many areas of the market. We've seen the higher interest rates. We've seen the inflation fears, and between the two of them, that has not really served the market very well. So the bullish continuation pattern has me a little nervous, because I do think if we break out, that's going to put some pressure on U.S. equities. And, I ought to talk about that just a little bit longer too, because normally in the short term, when the 10-year Treasury yield is breaking out, it means money's rotating out of bonds, and that usually is good for the stock market. The problem is when yields are going up, when the yields are going up in anticipation of inflation or an inflationary environment, that can be a different story. You can see both bond investors and stock investors going to cash. So you can see selling in both markets. A lot of times selling in the bond market is really good for the stock market, because that money coming out of bonds, if it's for economic reasons, if the economy is strengthening or perceived to be strengthening, many times you'll want to get out of bonds because as rates go up, you lose value. And instead, you'd rather be in the stock market, because as the economy picks up, that normally translates into higher profits for S&P 500 companies. So it's going to be very, very interesting to see what happens. If the yields break out and the stock market does not go up, then it's probably going to be because the bond market's a little nervous about inflation. And we do have a big report coming out on February 10th. It's a week from Thursday. That's when we're going to get the next CPI report. And you're going to want to hunker down, because the numbers are going to be higher. The annual core inflation rate at the consumer level is going to be higher next week. And what that means in terms of market reaction, I guess we're going to find out. But the market, there's going to be a lot of headline news out there talking about inflation picking up, continuing to gather steam. And that, as we know from over the course of the last year or so, has not been good news from time to time in the stock market. All right, let's move on to talking technically. And what I wanted to do here is just go through and point out first the NASDAQ. I've been spending a lot of time on the S&P 500, but I thought maybe we'd just take a minute or so to look at the NASDAQ, because we're right at a kind of a key level where we have seen, we saw resistance back in the middle of February at about 14,250. And then again, this was in April, same level. Then we had hesitation in June at the same level, and then we finally broke out. Once we got through 14,250, notice the pullback in July, we held. The pullback beginning of October, we held that 14,250 area and kept going up to new highs. Well, the NASDAQ's pulled back, and this time we didn't hold 14,250. We went right through that like a hot knife through butter. But after going all the way back down to almost 13,000, so losing more than 1,000 points after we went below that level, we've gotten all those 1,000 points back, and we're back at that 14,250 area. We also have a declining 20-day EMA. We got close to it second week of January, couldn't get through. And so anytime you're downtrending and you see that declining 20-day EMA, I get nervous. I tend to think we're not going to clear it unless we do. In other words, my assumption is that it's not going to be successful. Now, if we have a positive divergence, then that, begins to change a little bit. And then I think we might have a little bit more room. But right now we have no positive divergence. That PPO on our latest low was pointing straight down. Momentum was building as we were moving lower. Momentum on the sell side was building. So this move back up is, this counter rally, I think could present a shorting opportunity for those who are interested in shorting. Yeah, I'm not a big fan of shorting, only because I believe long term we remain in a secular bull market. I think this potentially could lead us into a cyclical bear market, which I think will last no more than 3 to 6 months. And from there, I think we go back higher again and we set new all-time highs. So cyclical bear markets occur within secular bull markets. And that's what I believe we've got facing us in 2022. So with that being said, any kind of a move back up to challenge, say, a 20-day EMA is one that, we should be a little nervous about. All right. One other chart I wanted to show you. Well, let's look at the weekly chart as well on the NASDAQ, because this gives you a little different picture. On that daily chart, we're talking about the 20-day right here, which is what, 14,377. So just under 14,400. You can see this breakdown here, 14,750. That's a price resistance level that we would want to watch if, in fact, we do get through the 20. Here, I've already talked about that 14,250 level. Can we negotiate it? Can we break through that and the 20-day moving average? Probably we'll get that answer tomorrow. But if we do, then we got this 14,750 level. So that's what we're looking at on the daily chart. When I pull up the weekly chart, I'm seeing, some similar numbers. And the one number would be these moving averages. So we have the 50-week moving average, which is currently at 14.5. And then that rapidly declining 20-week EMA, which is currently at 14,859. So we're sitting at 14,250 or just beneath it. And, we just talked about, the 20-day coming up, 14.3 and change, 14,378. Then we've got the 50-week moving average at 14,520, the 20-week moving average at 14,859. And then that prior breakdown that we had talked about right in here, which you can see much clearer on the daily chart right here at 14,750. So I would say the current area up until maybe about 14.8 or so is kind of a range on the NASDAQ that I would consider building a short position if you're interested. So I think just going in, you could certainly just have the 20-day as your line in the sand. So you short on this side of the 20, and if you close on the other side of the 20, you just get out. So you don't take any big chances. That would certainly be one strategy. Another, like I said, you could start to build a position and use short-term strength even above the 20-day. Let's say we do get a little bit of a move to the upside here. Maybe you give it some room up to, say, 14.7, 14.8, and build your short position in there. And then if you want to hold off all the way to the 50-day moving average, you could do that, or keep it tighter. Everybody's different. Everybody's got a different strategy. Everybody, looks at the market, looks at the charts differently. But that's what I'm seeing. I think anywhere from the current price up to about 14,750 to 14,800. That's where I'm looking for the NASDAQ to weaken and roll back over again. All right, S&P 500. So I've been talking about the S&P quite a bit. So, let's point this out, because two things. Number one, I was looking for this neckline right at 4,300 to hold. And here's where we pulled back. That was the left side of the neckline in October, went up, put in new high, which was the head. Then we came back down. You can see we went down under 4,300 to about 4,220 before rallying all the way back up and finishing at 4,400. That was a wild day off of this move to the downside. What we're doing is looking for capitulation. I had actually talked about this with our members and at Market Vision 2022 back at the beginning of January. This is what I was looking for. I was looking for a move down to test this October low. I had said back in early January that my minimum downside target was 4,300, which we've now hit. Maybe we go right back up. I think we're going to go lower again. I believe we are going to go into the 3,000s, maybe 3,800. And that measurement, by the way, of this head and shoulder pattern, 4,800 down to 4,300 is 500 points. That roughly would take us to 3,800 on a breakdown. So I'm watching this right shoulder over here. We're just about up to where the left shoulder was. We do have the 20-day EMA coming in at 45.29 and change. So we're almost there. We're right up against it. Prior low over here in early December, 4,500. That's a little bit of price resistance. And then you got the moving average resistance. Could we make it up to 4,600? Yeah, I think it's possible. I'm not counting on it. I would expect that we're going to, maybe sit over here in this right shoulder for a bit. Maybe we break down with the February 10th CPI coming out. I don't know. But it'll be interesting to watch that. Now, back on the 24th, last Monday, in the daily market report, I actually sent out a special abbreviated report at about 10:15 in the morning, because when we were making this huge drop on the S&P 500, I want you to look at that VIX reading. We got up to 39. Now, actually, I think it was 38 when I sent the email out to our members and just said 38 is really getting up there. And that's where we tend to see some big reversals in the S&P 500. Now, we started to reverse right off of that. Then we went down, I think, one more time, maybe an hour or two later on Monday. And the VIX actually got up to 39. It had gotten to 38. Then it went to 39. And from there, you can see the VIX has reversed and the stock market's gone back up. Now, I don't make this stuff up. I mean, you see this all the time. And I always talk about, forget about trying to find a technical level. You need to set a bottom with an extreme sentiment reading. And that sentiment reading came in the form of the VIX at 39. And that was the bottom in the market in the short term. Again, I don't know that we're done. I would, there's no guarantees, but I would say, maybe 70-30. That would be my probability that we're going to go below 4,300 and close below 4,300. I think it's probably maybe a 70% chance. That would be what I would put on it. Would I be shocked if we went right back up to 4,800? No, we're in a secular bull market. I would not be shocked. I think the signals are telling me we're probably going to need to go through some more weakness. We need to reset the sentiment, some of the sentiment numbers that I've talked about in recent weeks with members and so forth. That's something I think that takes time. You don't just reset sentiment with one VIX reading. We need this over a period of time. The market has been so complacent and so bullish for so long. It really needs to, take a little time off from that bullishness and maybe get a little bearish for a while. And so I wouldn't be surprised here over the next couple of months to see some more damaging technical issues on the charts and so forth. So, and we'll be talking about that as it happens, if it happens. All right, let's move on to chart lists. So this is something I think is a really cool feature, and this is something that we do for free. So if you're an Earnings Beats an EB Digest subscriber, that's our free newsletter that I pointed out at the beginning. So if you go over to Earnings Beats right here, if you sign up for that, we will in our EB Digest articles, we send out these chart lists, these earnings chart lists. So let me pull up this EB Digest. And then you go into the last Earnings Beats Digest, which was Monday. So that was yesterday, or excuse me, earlier today. And on the EB Digest, in addition to having a chart, a couple paragraphs, that's, normally what we do, paragraph, chart, and another paragraph. In addition to that, one of the things we do is we provide these upcoming earnings chart lists, and you get them for free. So if you take this and click that, you come over here to this upcoming earnings chart list page, and here are the chart lists for this week. Now I'm going to show you how easy this is. I'm just going to copy the password. So Command copy on a Mac, and then click on the link. Oh, I must have already saved it. Maybe the next one I can show you how you use the password. But anyway, on here, what I would do is I would save this chart list. I'm going to replace a chart list that I already have set up in StockCharts. And right here, upcoming earnings, January 31st. And I'm going to hit save results. And there it was, boom. There's one down. Now I'm going to go in here and I'm going to copy password, hit this link. This is Monday, afternoon, Tuesday morning companies that will be reporting. Here's where you enter the password. So now I'm just hitting Command and V. So that will paste it, unlock the list. And now I can save this chart list. I'm going to replace one that I already have set up. So anything that would be in there, any contents are now going to be replaced by these charts that I'm downloading right now. So I'm going to hit this save results, and there it is. So that's the next day. And then we can come in here and I'll do one more day, and then I'll show you one of these chart lists. Copy. Paste, unlock. And then just put this down here. This will be the next one. Upcoming earnings 2-1 after the market closed to 2-2 before the market open. Save results. And there you have it. Now, the beauty is once you've saved this and download, now if you don't have a StockCharts account, or you're not an extra or pro member, so if you just have like the basic service at StockCharts, I think you only get one chart list, and that's your default when you first set up your account. So you're not going to be able to download any of our chart lists if you're not at least an extra member. You need to be an extra or a pro member. But even if you're not a member at all, you can view all the charts that are in our chart list. You can just scroll down. And then when you get all the way down, I think it's 10 per page. Or maybe it just keeps going. Yeah, okay. So you can just view all of these charts. And all the way to the bottom, let's see where the bottom is. There you go. So 30. So you got 30 charts here. And then okay, well, yeah, those are the 30 charts on this page. And then if you go all the way to the bottom, sorry, take you all the way back down here again. There, now you can go to the next page, and there's 31. And so it's 30 per page. So we'll go all the way down here again. And then the last page right here. So all of these are all companies that will be reporting after the close on February 1st or before the open on February 2nd. So February 1st is Tuesday. So these are going to be the companies that report Tuesday after the close or Wednesday before the market opens. Now, the beauty is once you have downloaded this, let me go into this, the one I just downloaded. So right here, which is 2-1 after the market closes to 2-2 before the market opens. If I click on this view all and hit summary, now if I do this at 9:31 in the morning, I can literally sort all of these companies that have just reported into this list, top, percentage change, best percentage change to worst. So you can see how the market is reacting to all of the key earnings reports that day. I think this is just a fantastic chart list, and it's free. So I don't know how much better price we can give you than that. It's free. So all 5 of these chart lists you can get just by being a digest subscriber. And that digest subscription doesn't require a credit card. You can it's just name and email address. And you can then download this. If you have a StockCharts account, you can download these chart lists right into your account. We do all the work for you. We get them all set up. And over here under the names, the ones that start 0001, these are going to be ones that reported the afternoon of February 1st. And then if you go down, you see the ones that start with 1000. These are the ones that come out the next morning. So that's how you can separate them if you're interested. I mean, they're both, it's one's after the market closed, the other one's before the market opens. So it's all between when the market shut down last and when it reopens. So I think it's great information to have. And then, you can do with it what you want. You may want to trade these stocks depending on how they've, reacted to their earnings. Sometimes you get big gap ups and then you get failures. So you might see a big gap up and you might short it because when everybody's buying at the open, that's what market makers are doing. They're shorting. So you certainly could take that position. Or if you get a big gap down, you could go long, because again, that's what market makers are doing. If everybody wants to sell at the open, market makers are going long. Anyway, I thought that was pretty cool. Chart lists, and we do this every week. So if you're a Earnings Beats Digest subscriber, you'll have these chart lists already set up for you. You literally download them into your account at StockCharts, or you just review them. You can review the charts if you're not a StockCharts member. All right, let's move on to earnings spotlight. So not a whole lot going on today after the market closed. Probably the biggest one was NXPI. This is a semiconductor. They reported, now the stock has been going down, but the AD line is trying to break out. So this is an interesting chart. Not really showing a lot of leadership, though, relative to semiconductors. It's mostly been going down. It's come off of its 52-week relative low, but not by a lot. So I think this is sending some mixed signals. And then after hours, you can click on symbol summary and type in your symbol, and you can see what happened after hours. NXP is up $1.26 after hours, 206. So we can go back, look at that chart, 206. So it's still just below the 20-day. I would be careful if we open below the 20-day and then take off and then come back down and close below the 20-day. If we leave a long tail above, that would not have a great look to it. All right. Let's see. Another company that's reporting, or that reported after the bell today, was CRUS, which is Cirrus Logic. This is another semiconductor. And AD line, okay. Price action's just been sideways. So again, relative strength, not very good, although it has come off of the recent bottom, just like NXPI. And then again, we can go in here and we can check, see how it reported, what was going on after hours. Down 2.75%. So back down to about $87. And on the chart, that would just take us right back to here. So still in the middle of everything, not really seeing a trend on this one. All right, let's wrap up the show with the 3 you must see. So I'm going to give you a few stocks here. I'm going to start off with Train Technologies. I actually like the reversal that Train made here. Let me just annotate this for you real quick. You can see this is probably my favorite tool when you annotate this auto support resistance line. I can just draw it real quick and see there's that low. Look what happened. It looked like we were breaking down 2 days in a row, and both days came back up and closed at the high. So I would suspect that Train, we will see a little bit of a rally coming off of those 2 false breakdowns. Next up, Applied Materials. And Applied Materials is another one. Looked like it was breaking down, on the verge of breaking down on Friday, but the recovery was nice, and we had a nice day today. But if you go back and you pull this up, I mean, these are your lows right here, going all the way back to early part of summer. 125 has been a big support level for Applied Materials. Went right down there, bounced off of it today, 138. So literally one day after hitting support, it's up more than 10%. And then the last one I have for you is Ford. So Ford came down, and I think you can see here, I'm not going to annotate it, but right at $19. That's the level where Ford has been bouncing from back in November and December, and we did it again last week. So Ford looks interesting from that 19 level as well. All right, that's it for me. I want to thank everybody for tuning in. I'll be back on Wednesday morning over at earningsbeats.com for your next Trading Places Live. Have a great day, everybody. Take care. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.